Gautam Chowchuria, Head of India Research Mid and Small Cap Vertical with UBS India. Gautam, good morning. Thank you for joining us. First, let's start with your broad call on Indian markets.
Yeah, good morning. A broad call has been that you still stay defensive on Indian markets for a while. I think it's still a couple of quarters away before you see real improvement in fundamental macro parameters. In terms of noise, etc., we'll keep hearing these noise around policy reform, etc. But what we have seen over the last 1.5 to 2 years is that these hopes keep coming every quarter or so, and then we have seen disappointment. So we're not really looking at, we're not saying that this may not happen this time, but our sense is looking at the current political setup, we still haven't got enough indicators from top political leadership to say that these things will happen. So we're still having keeping fingers crossed. So let's see. But we're not really building up big expectations out of that into our analysis. But in terms of where the markets are right now, our sense is that the markets are definitely pricing in some catalysts already from the government post-presidential elections. And again, we try to analyze that is to break it up into two parts. One is things which are linked to finance ministry, and there's some hope that with the Prime Minister taking over finance ministry, you will see more action there. But again, the finance ministry linked issues are GAR and retrospective tax, which are sentimental issues, not really fundamental economic trajectory long-term issues. So that doesn't change the need for reforms in other major areas like FDI, retail, coal, etc. So those are areas where we will be looking at. Now, the other aspect is the diesel price hike, which I think market is already sort of building that into its expectations, and which we also think is quite a likely event, because without diesel price hike being done post-elections, you are running into serious fiscal challenge, and also with the overhang of S&P downgrade. So those are serious overhangs, which I think the government doesn't have much of a window to avoid that. So I think diesel price hike will definitely happen. But what will make us more positive on the Indian markets will be other areas of reforms and policy action.
So Gautam, what is the view on the side markets? Do you think the case is building up towards outperformance versus the frontline indices, or do you think they will underperform in the near term?
You're talking about the small caps?
Small and mid caps both.
Yeah, so the small and mid caps, again, they have outperformed over the last few months, primarily I think because of under ownership, and also because the valuation gap had widened a lot. And if you look at India is in that context quite unique compared to a lot of other global markets, that you do have very strong bottom up stories in India in the small and mid cap space, companies which are not necessarily the number 3, number 4 player in the industries, but market leaders. So those companies have been doing reasonably well, and but valuation gap had widened compared to large caps. So that's a sort of a catch-up trade in our view. Also, part of the index, big part of the index, when you look at the overall index, there are a lot of stocks from sectors which have been cyclically beaten down, like in industrials and infra. And as the market started building in expectations from some policy recovery, then these stocks were much more beaten down. So again, there's a catch-up trade there also. But going forward, I think it will be much tougher for them to outperform the broader market in the near term. They will need, because the valuation gap has narrowed down compared to last 2 4 months back. So it will be tougher for them to outperform from here on.
Gautam, you've liked some of the FMCG/consumption stories from the mid-cap universe. They've been outperforming for the last couple of days. Would you reiterate that stance? What is it that you like out of that space? And is it time to book profits, or would it be too soon?
I'll reiterate that stance that it's too early to book profits. And the reason why we like a lot of the small cap names from that space, like Bajaj Electricals or TTK, or even consumption type of plays like Exide, etc. Again, they have clear bottom-up stories going for them. And this is beyond, and if you look at the consumption slowdown, we've already seen last 3 quarters of consumption slowing down. If you look at GDP data, consumption has slowed down. It's still growing, but slowed down. But that's the basic point, that you will see a slowdown, but you'll not see a degrowth or a falling off the cliff. That won't happen. You'll still see robust growth rates. So if you see even durables, excluding the white goods, they still have been growing very robustly over the last couple of quarters. And that trend we expect to continue. Even in a case of a very weak monsoon, the impact will be marginal in terms of growth rates. It will still show robust growth, maybe at a lower growth rate, but still show robust growth rates.
Gautam, TTK Prestige is growing at about 20% plus. Now that's a reasonable growth rate, but do you think it is good enough to keep this momentum going for the stock?
I would think so, because again, even if you look at 1Q, and first quarter was a quarter in hindsight where the macro environment was very, very challenging, both in terms of growth as well as in terms of consumer sentiment. Even then the company delivered 30% growth rate in revenues. And I think the driver for them specifically is also because they are broadening their product portfolio and products, which is a big driver for them. So it's not just the industry growing. They are able to grow much faster than industry, which is helping them sustain these growth rates, which is not changing going forward also. If you look at next 3 to 4 quarters also from a near-term perspective, even that period is marked by them potentially benefiting from this extra product lines, definitely.
Gautam, why is it that you like Exide? It was a disappointing quarterly performance from them, and there is competition in the space as well from other players like in Amara Raja Batteries.
Yeah, so competition has always been there, so it's not nothing new. So Amara Raja has always been there for last 5 years at least, and Amara Raja is also doing very well. But I think the structure of the industry has not really changed. It's still broadly a two-player industry, Exide and Amara Raja. And if you look at the last couple of quarters, Exide has been able to regain some market share. And I think that could be the key surprise for the next couple of quarters, that the market share regaining should drive growth for them. The second aspect is why we like Exide is also the huge opportunity coming from two-wheelers batteries. Now, the two-wheeler batteries, if you know, the bikes have been seeing a shift from kickstart to push start over the last couple of years. Exide has been benefiting in terms of supplying to the OEMs, Hero, Motors, or Bajaj, but they're not really benefited from supplying to the aftermarket, where the margins are much more attractive. Now, that should play out in terms of replacement cycle towards the end of this year, and more so next year. So that will be a positive surprise in terms of earnings estimates in our view. And that's the reason why I think we really like Exide beyond the core story.
So Gautam, construct a mid-cap portfolio for us, more like an absolute return portfolio with no sector bias.
Yeah, so we typically have a approach to have an absolute return bias anyway, without any sector or any relative performance bias. So our top picks at this stage would be Exide, Bajaj Electricals, TTK, then VIP, then Zydus Wellness, then possibly Voltas. These would be the top picks for us.
Are you just taking a one-sided bet because you're ignoring two sectors?
No. It's not. Again, this is purely a bottom-up stock perspective as to where we see the maximum upside from current stock price from the coverage list which we have.